Credit note and debit note. Credit notes and debit notes are essential financial documents used in business transactions to record adjustments to accounts payable or accounts receivable. Understanding the purpose and differences between credit notes and debit notes is crucial for accurate financial reporting and maintaining transparent business operations. Let's delve into a detailed explanation of each. 1. Credit note. Definition. A credit note, also known as a credit memo or credit memorandum, is a document issued by a seller to a buyer, indicating that the seller owes the buyer a credit against future purchases or a refund for returned goods or services. It serves to reduce the amount owed by the buyer to the seller, effectively reversing or adjusting a previously issued invoice. Purpose. Credit notes are typically used in the following situations. Return of goods. When a buyer returns goods to the seller due to defects, damages, or discrepancies, a credit note is issued to refund the buyer or provide a credit against future purchases. Overpayment. If a buyer has overpaid an invoice, either intentionally or accidentally, a credit note is issued to adjust the account balance and refund the excess amount. Contents. A credit note typically includes the following information: seller and buyer details, date of issuance, credit note number for reference, description of goods or services being credited, quantity, unit price, and total amount being credited, reason for issuing the credit note, any applicable terms and conditions. Impact on financial statements. When a credit note is issued, it has the following impact on financial statements. Decreases accounts receivable for the seller. Reduces revenue or sales recorded in the income statement. Adjusts inventory or cost of goods sold, depending on the nature of the transaction. 2. Debit note. Definition. A debit note is a document issued by a buyer to a seller, indicating that the buyer owes the seller additional payment or a debit against future purchases. Similar to a credit note, a debit note serves to adjust the amount owed between parties, but in the opposite direction. Purpose. Debit notes are typically used in the following scenarios. Purchase returns. When a buyer returns goods to the seller and requests a refund or adjustment to the purchase price, a debit note is issued to indicate the increase in the buyer's accounts payable. Price adjustments. If there are discrepancies in the pricing or quantity of goods received, a debit note is issued to request a reduction in the invoice amount. Contents. A debit note usually includes the following details: buyer and seller information, date of issuance, debit note number for reference, description of goods or services being debited, quantity, unit price, and total amount being debited. Reason for issuing the debit note, any relevant terms and conditions. Impact on financial statements. When a debit note is issued, it affects the financial statements as follows. Increases accounts payable for the buyer. Adjusts the cost of goods sold or inventory for the seller. May impact revenue recognition or sales recorded in the income statement. 3. Differences between credit note and debit note. Direction of adjustment. Credit note reduces the amount owed by the buyer to the seller. Debit note increases the amount owed by the buyer to the seller. Initiator of document. Credit note issued by the seller to the buyer. Debit note issued by the buyer to the seller. Purpose of issuance. Credit note typically issued for returns, refunds, or overpayments. Debit note usually issued for purchase returns, price adjustments, or additional payments. Impact on financial statements. Credit note decreases accounts receivable for the seller and may affect revenue recognition. Debit note increases accounts payable for the buyer and may impact cost of goods sold. 4. When to use credit note and debit note. Credit note Use a credit note when issuing refunds, processing returns, or correcting overpayments. Issued by the seller to the buyer to reduce accounts receivable and adjust revenue. Debit note. Use a debit note when requesting refunds, adjusting purchase prices, or processing purchase returns. Issued by the buyer to the seller to increase accounts payable and adjust the cost of goods sold. 5. Conclusion. Credit notes and debit notes are essential financial documents used in business transactions to adjust accounts receivable and accounts payable. Understanding the purpose, contents, and differences between these documents is crucial for maintaining accurate financial records, resolving discrepancies, and ensuring transparent business dealings. By effectively utilizing credit notes and debit notes, businesses can streamline their accounting processes, enhance financial transparency, and maintain positive relationships with customers and suppliers. Useful expressions. We've issued a credit note for the returned merchandise. The credit note has been processed, and your account has been updated accordingly. Could you please provide the credit note number for reference in our records? The credit note will be deducted from your next invoice. Thank you for your patience. Your credit note has been approved and will be reflected in your account shortly. I'll email you a copy of the credit note for your records. Please review the credit note details and confirm if everything is accurate. We've applied the credit note to your account balance, resulting in a zero balance for this invoice. The credit note serves as a refund for the overpayment made on the previous invoice. We've received your request for a debit note to adjust the purchase price. Could you please issue a debit note to reflect the additional charges for expedited shipping? The debit note has been issued to correct the pricing discrepancy on the invoice. We'll need to process a debit note for the damaged goods received. Please provide the debit note number so we can track the adjustment in our system. The debit note indicates the additional costs incurred due to changes in specifications. We've adjusted the invoice amount based on the information provided in the debit note. The debit note has been approved and will be reflected in the next billing cycle. I've attached a copy of the debit note for your review and approval. The debit note serves to reconcile the accounts and ensure accurate financial reporting. When issuing credit notes or debit notes, it's essential to maintain proper documentation. Both credit notes and debit notes play a vital role in ensuring accurate financial records. We use credit notes to address customer returns and refunds, while debit notes are used for purchase adjustments and additional charges. The issuance of credit notes and debit notes helps maintain transparency and accountability in our financial transactions. Please consult the finance department if you have any questions regarding credit notes or debit notes. It's important to review credit notes and debit notes regularly to identify any discrepancies and address them promptly. Our accounting software automatically generates credit notes and debit notes based on predefined criteria. Credit notes and debit notes are subject to approval by the relevant department before being finalized. We've implemented strict controls to ensure the accurate issuance and processing of credit notes and debit notes. The finance team is responsible for reconciling credit notes and debit notes with the corresponding invoices to ensure accuracy.